Hello, everybody. Welcome to the Anomaly course, Core Content Lesson 2. Here we'll be covering point of interest or key levels. Firstly, let's talk about swing highs and lows. So really simple, right? What is a swing high and low? Well, it's essentially a three candle formation, right? Candle 1, candle 2, candle 3, where you have candle 2 here and a candle to the left and the right of it. That swing low is your key level. And for a swing high, it is the same thing, right? Middle candle, candle to the left, candle to the right. So this is exactly what we want price to look like when we trade into a high or low as our key level, right? So here's a bearish swing low. We want price to trade into that bearish swing low and create a reversal candle so that we can trade continuation away from it, right? And here we have a bullish swing high, same thing, price trades into it, fails to displace through it, rejects it. We want to trade away from that towards our draw on liquidity. Now here we have a fair value gap. This is our second key level. We only use two key levels. So what is a fair value gap? It is also a three candle pattern where candle 1 and candle 3's wicks do not meet, right? That creates a gap, and that gap is our key level. So when price trades into our fair value gap, what do we want to see? Essentially the same thing, right? We want to see price respect this fair value gap. We don't want to see it be closed through. Ideally, we want to see it wicked. We want that reversal confirmation. Then we want to trade the continuation away from our key level. Now let's talk about how to actually trade away from these key levels. And that's how we're going to use confirmations through opposing candles. This is what is called a chain of state delivery. It's essentially the last set of opposing candles that trades into a key level when they get closed through. As you can see, the opening price of these last down close candles, when closed through, is your change in state delivery. It is the indication of a change in trend and the confirmation to a reversal away from your key level. For a bearish scenario, it is simply when price expands into a bearish key level, closes through those last set of opposing candles, and that will be your confirmation for reversal. So now let's apply opposing candles when using highs and lows as your key level. So price trades into our swing low, which is our key level. Look at these down close candles. This is the last set of opposing candles that trade into the low. When closed through is our change in state delivery. Now we want to see price expand away from the reversal, supporting expansion. So here we have a bearish example. What do we see? The last set of bullish opposing candles into our swing high. When closed through is our indication of reversal. There's our change in state delivery. Now we can look for continuation. Now let's see what that looks like as a fair value gap as our key level. As you can see, this is the down close candle into our key level. When closed through is the indication of a reversal that price is respecting this fair value gap. We can trade away from that fair value gap and get on side with the markets. Here we are for our bearish example. What do we see? Bearish key level, which is a fair value gap. We have an opposing candle trading into that fair value gap. When closed through is our opposing candle that we're going to use for continuation. So now let's go over an example where we have a swing low as our key level. So what do we see? Price trades into that key level. What do we want to see if we want a bearish reversal? Price reverse off of that. What do we have here? A bearish C2 candle. But most importantly, we want to see that chain of state delivery for confirmation to trade away from this swing low. So here we are dropping down to the 4-hour time frame. What do we see? We have this down close candle that trades into this swing low on the higher time frame. When closed through is our higher time frame chain of state delivery. And as you can see for continuation, what do you want to see? Gaps hold, shallow retracements, right? These are expansion signatures. What do we see? This down close candle trades into the key level. When closed through is our confirmation for continuation. We're not going to use any of these down close candles because what do they not do? They do not trade into a key level. So moving on to our next example, here we're going to go over a fair value gap as our key level. As you can see, price trades into our fair value gap. And what do you want to see? Reversal signatures, right? We have a 4-hour C2 candle. What do we want to see within these higher time frame candles is lower time frame reversal signatures, which is going to have your lower time frame change in state delivery and opposing candles. So dropping down to the 15-minute chart, what do we see? Price takes out this high here. These are the opposing candles that traded into the high. When closed through, that is your chain of state delivery. Now you want to see bullish candles or opposing candles support price lower, right? Price is in a down move, so we want up close candles to support price lower. So you can see this up close candle should support price lower. It doesn't mean price has to hit the opposing candles. It just means that we want, if price does come up here, we want that to support price lower, right? But as you can see, we have some fair value gaps here. Price retraces into it, has an opposing move to the direction, right? Which is a bearish move. When closed through, this is our new protected level, right? Price retraces again into a fair value gap. When closed through, we want that to be our protected level, so on and so forth until we reach our draw on liquidity.